All right, all right. Friday SPY was up 0.44%, and we did get the bull breakout we were looking for above 531. So above 531, I'll be looking for a retest of the bear breakdown at 538 and the gap fill just above 539. And if the bears are strong, that is where I'll be expecting the bears to get another rejection for another lower high. And if we do reject from that zone, we could come back down here and close this gap at the rising 200 daily moving average right around 504 to 505. So remember, we're viewing this as a risk-off market that is a downtrend below 538. So as we're coming up to 538, that bull trade should be getting their profits locked in and then waiting for confirmation we can break through that resistance before continuing to stay bullish. Because of the fact we are in a risk-off market, that could be the next lower high before the next lower low. So in the very short term, above 531, I'll be looking for the retest of the breakdown at 538 and the gap fill above 539. If we continue to push through that, then I'll be looking for a test of this resistance zone right around 544 to about 547. So it's very clear where we are going, but once we get there, we'll need to let price tell us if we're going to see that rejection or just continue higher. And as I've said before, I am not ruling out the possibility that Monday morning was the bottom because we did get enough volume and enough sentiment shift that could have been a capitulation event, which does mark bottoms in bull markets. And I still do believe this is a bull market. So even if we do get a lower high rejection and we do continue lower, I am still viewing this as a correction within a larger degree bull market that is likely still going higher. So it's up to you how you accumulate or how you trade. A lot of day traders are taking advantage of this volatility, but if you are a longer term swing trader, I do think you can easily manage risk from Monday's low, or you can easily just manage risk at the previous higher low right around 518, or even the 5 daily EMA on this chart. Because you have such clear risk levels, there is absolutely nothing wrong with holding long swing trades, but you do have to believe it's still a larger degree bull market going higher after this correction. Otherwise, it wouldn't make any sense to do that. So follow these critical levels. I think you have very clear risk here, well defined. If we start to break down back down below 527, we've likely seen that lower high and we're likely going lower. So if we do break down below 527, that is a near-term risk-off signal, because longer term we're risk-off below 538, but currently you could be risk-on until we hit the price target and then simply just get risk-off if we break down below 527. On the NASDAQ 100 triple Qs, we were up 0.52% on Friday, and we also had the bull breakout, just like SPY did. And above here, we were looking for the break of the previous day's high at 449 and to continue to close above 446. And this now looks like we are pushing higher towards the breakdown, right around 556 to about 558. And I do think we could push as high as to about 560. But as I said with SPY, that could still be a lower high rejection. That could still send us for another leg lower. So as we get up into this resistance, we will want to lock profits and wait for confirmation that we can break through it before assuming we can go any higher, because this is still a daily downtrend of lower highs and lower lows. So respect the trend. The trend is lower in the very short term, but as I said with SPY, in the longer term, this could be a giant pivot off of a rising 200 daily moving average and a bull market that is going to resume higher. So you could still be a long swing trader even with the risk off environment, even with all of the fear, and even with all of the people saying the market has topped and it can't go higher. Obviously, these people have no idea what they're talking about. The market could easily go higher, but in the very short term, we will want to see confirmation from price and not just guess and not just assume. So right now, I think this market will remain volatile because we have bears that are looking at this downtrend and bulls that are looking at the larger degree uptrend, and that will be a little bit of a battle until we see very clear evidence from price that is objective on whether the bears or the bulls are winning. If the bears are winning, we won't break through that resistance. If the bulls are winning, we will. And that is why we do not have to guess. We will see confirmation from price. On the VIX, we were down about 14.3% on Friday, and we are continuing to see that VIX crush from that Monday morning low. And this is another reason I think a lot of people can hang their hat on the fact that Monday morning could have been the bottom within a bull market, because VIX that high we haven't seen since the 2020 crash and the 2008 financial crisis. So that is a very high VIX, and as you can see, it is getting crushed very quickly. And I still think if we resume the bull market, we're going to see the VIX all the way back down here near 13. But let's wait for price action in the indices to also confirm a bull breakout from that resistance and confirm that we will continue to push higher. And then very quickly, we'll look at Bitcoin, because we also had a very bullish week in Bitcoin. We had that very powerful impulsive thrust higher that broke the resistance at 60,000. And right now, the bulls just need to hold above 60,000. If the bulls can hold above 60,000, I think we could push back to the top of the range at 65,000 and then 68,000. But if the bulls cannot hold above 60,000, do get risk off, because this could just be another lower high before we make that next lower low, and that could take us way lower down into the $40,000 range. So I don't necessarily think the bear scenario has to be correct here. I'm just telling you above or below 60,000 will tell you if you should be risk on or risk off in Bitcoin. So quickly, just jumping back over the S&P 500, it does look like we're pushing a bit higher in the short term. Volume is dropping off, so we've definitely seen the selling pressure starting to go away from this market, but it could come back at any point, especially if the bears are just waiting for that rejection at the lower high. So have a risk level. I think in the short term, you can remain bullish. In the longer term, from Monday's low, you can remain bullish, but if you are a day trader, continue to move like water and manage risk around these levels on the chart. And that is what we will continue to do in the Stock Channel Discord server, where we are absolutely crushing this market by simply getting the best probability with the best risk and reward trades. So if you want access to all of my trade ideas, my intraday updates, and my technical analysis, that is in my Discord server, and you can find out how to join the Stock Channel Discord server by clicking on the link in the description of this video. One more note, that if you are a member, be sure to refresh yourself on the August members only video, because that scenario that I laid out is starting to play out and you have very clear risk levels defined here. So if you're a Discord member, be sure you have reviewed that video again over the weekend and be prepared with a trade plan going into next week and the remainder of the month. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.